What is going on, everyone? It's your boy at the weekly close, here to report on the art of the chart and share the latest trends, thoughts and analysis from different minds all in one place. This is a little bit of a backlog. We're looking back at week 17, and the kind of theme of this is hovering at key levels, looking at kind of where we're sitting at the moment. If we're looking at BTC sitting under that, constantly hitting our heads under 30,000 as a key level dollars, and then ETH again on the 2k mark, so kind of constantly hovering around that. So I thought I'd just kind of kick off with some interesting high level info with regard to the halving cycles. I just think it's really interesting, this information shared by Invest Answers, but the original appearing within the Financial Times. And this is on the subject of bear markets, and whether you believe them or not, the interesting thing is obviously how they've repeated in the past. And I guess this kind of notable area that we've discussed in the run-up towards the halving cycles, it basically signifies the bottom. It's that year between the halving. So I guess what this three are overlaid bear cycles, all within 50 days, 365, 364, 411, this kind of like 50-day range that has in the past represented the bottom of the bear market cycles. So I know I saw something from Plan B earlier in the week, kind of loosely suggesting this is a great place, 2x leverage to go into the halving and a year after, and there was some sort of preposterous claim about how good a return historically that has been. And this was kind of partnered with this from Glassnode. Again, just looking at from this point onwards, the kind of level of correction that we have seen in historical approaches towards the halving and onwards towards the all-time high. So seeing these gains, how we started 2023 compared against all of those historically, so 2011, 11 to 13, 15 to 17, 18 to 21. So it'll be interesting to see what happens. We are just here on the 2022 cycle. So looking at this video earlier in the week from Games of Trades, it's with the title "Why We Are on the Brink of Seeing Mass Layoffs, Stocks Won't Hold Up Against Them." And it's true based on some of this data. So let's look at the key things here. Right now we are looking at the unemployment rate on the weekly time frame, and the kind of point here is that we are at historical lows at the moment. 3.5% unemployment. That's let's compare that to 2008, where that was getting as high as 10%, and compare that even further back to the interwar periods, where we saw heights of 20 to 26%. So it's interesting to think, obviously, if the Fed is measuring progress in raising interest rates, looking for upticks in unemployment claims within the jobs market, there is still a long way to go. So it'll be interesting to see this face-off taking place at the moment. But nonetheless, this was overlaid even further with initial claims. The initial claims being the very initial claims for joblessness taking place in the States, and that kind of partnered with these grey bands, which are recessions, going as far back as 1968. So the fact that basically the bottoming of all of these initial claim cycles, whenever they've represented an uptick, they were always followed by a recession of some sort. And we could, you could see that even from these periods as well. So the fact that we've seen this bounce from 2020 going into 2023, we're just anticipating and expecting the grey shadow to oversee us moving forward. And if we were to overlay that even further with how the S&P has kind of moved in recent history, obviously as soon as we enter into a bear market, into a recession, one of these grey bands, it's always signaled a slowdown or a drop in costs in the price of the S&P. That is demonstrated in 2007, 2000, going all the way back. The only time that we have actually just seen the S&P move from strength to strength through a recession, though, is perhaps maybe exceptional circumstances in 79 at a very different makeup, where we had a price to earnings ratio of 7. It just to kind of get across how cheap the market was then, compared to a lot of people calling for this PE ratio of 20 that we're at the moment. to further be adjusted and lowered. So it will be interesting to see what happens. We're getting the uptick in initial claims, where everybody's waiting in anticipation for the official start of the recession, and the question mark is how much lower for the S&P. Looking at this video from earlier in the week from Jason Casper, just quite a simple one on a high level time frame. Here we've got the 4-hour chart, and it was just pointing out and warning of what could potentially look like the beginning of a head and shoulders formation, where if we're going to see a break of that neckline, the break of that 27,000, we could expect going down to test that I presume behind his head is looking in the region of 22 or 23k, which isn't unrealistic and wouldn't be taking off bullish trends in the long term. I think if we actually kind of partner this with some macro Elliott Wave counts, we are in one count in particular suggesting we should be seeing a bit of a pullback to about that 25k region anyway. So interesting one to be watching as we move forward. From Marzel, there was this looking at the ETH chart on a weekly time frame. It was just kind of pointing out the importance of where, this is what I'm talking about of some of these critical levels that we are sitting at the moment. So here we have former resistance, which we have flipped and turned into support, which is great, and the kind of other important weekly levels that we have standing. And then looking at that specifically, we have this inverted head and shoulders where we've broken this longer term downward trend, and we've seen kind of a retest and anticipating essentially if the opposite of what Jason was talking on BTC. If we see a break of the neckline in this direction, we can expect to test those higher weekly levels at $3,500. But looking at Bitcoin in the meantime, on the weekly on the 3-day time frame, again just hitting our heads on that kind of critical level, that just above the 30k level, which we haven't made progress on breaking yet. We're kind of hovering, building up candles right underneath that critical level. And I guess what we'd want to anticipate and see is a sharper, bit more of a pullback, which would be a sign of the market maker trapping that kind of liquidity of a lot of people anticipating it to go higher before eventually making that move. And I don't say that from a bias, I just say it from a lot of the on-chain activity as well, suggesting that also. And it's just worth remembering where we've come on a much larger time frame. We've broken this downward trend, this long-term resistance, which was tested once and broken until the second time, and essentially it was broken, retested, continued until we hit the next significant level. So I totally anticipate that further pullback before progressing further forwards. But looking at ETH on the daily, there was this question of these critical daily levels holding, and I guess the question at the time was, if this kind of approximate 17.95 level didn't hold, this kind of $1,800 was to break down, we'd expect it to go down to the next 17.15. But to be honest, it has held, and we have seen price come up to the underside of the $2,000 mark in the meantime. Looking at this video from Stavros Tousios, it was just kind of continuing from actually one of his earlier videos from a couple of weeks ago on his larger macro count for Bitcoin on Elliott Wave. And I think essentially on this image, without having to go into it too much, he sees the larger correction still playing out, the larger correction being the wave 4 took and as I'll show on the next slide. So this being an A, and then he's kind of put notionally until they kind of take place, the B and the C, and he's always spoken long term about a larger correction before continuing to the downside, which is obviously counterintuitive to what we've seen from Green Star Trading, which is who Tom is suggesting we are on a macro Elliott Wave count towards the upside. But I think it's good to obviously get differing opinions on this. But at least if I was to review this just in terms of, I think it's important to partner with on-chain things. We have access to that information. And at the moment, I just can't see how, as we're going strength to strength on-chain activity and all the metrics that are showing green lights there. It's not that this is it's not totally unlikely, but I expect, especially while there's a lot of political uncertainty taking and economic uncertainty, Bitcoin's performance in a recession, maybe this isn't off the cards in its entirety. So let's see. Looking on a much smaller time frame from More Crypto Online, but this time taking a quick look at Solana, and it's just kind of talking about, this is on the hourly, and with a lot of crypto essentially moving in unison a little bit. I think we were all anticipating that this was a bit more of a traditional 5 waves to the upside and 3 waves to the down, and essentially kind of discounting this count on the smaller time frame, and really considering more of it of a long-term correction. But I guess the important thing to consider and remember here was that essentially the bullish count is still in play as long as $1776, or so I should say $1778 holds for Solana, and I presume that's because the 0.786 is representing the further low of a wave 4 moving onwards, but nonetheless a level to watch. In this kind of final video, we've got the FX pip collector, and this was just kind of touching base on for a little bit of Forex on the Euro USD on the monthly time frame, and was just looking, on an Elliott Wave count, looking at this kind of 5 wave really clear count to the downside, and then basically the anticipation now of what would the beginnings of either a wave A, as this kind of the notes kind of suggest, or a wave 1. So I think a few people will be watching that really closely. And what are the signs going to be? Well, I guess we want to see a further real pullback on, if this is a wave 1, we're looking for that deep 1-2 retracement. Well, that being said, the five waves completing to the upside could be for either the A or the 1. So for the next formation of, well, essentially, if this is the monthly time frame for the next year, anticipating that this is going to be a continuation of that upwards movement. But what happens after this completes, we'll have to watch closely, because if it is a 2, it could easily come all the way back down to the 0.95 or close to it, just can't match it. And if it's a B, well, it's a different outcome. But at least for 2024, interesting suggestion that the 5 waves to the upside are in play. And that was looking at the Euro USD on the 1 hour time frame, just suggesting that we're in that move of the wave 3 to the upside. So as a kind of like a quick summary, and just looking at some of those things to watch, it's been a very interesting week, and the fact that we've had really positive employment data at the same time when we've got the Fed being consistent with a 25 bips interest hike at the same time. That being so this kind of question of what's going to break first. Is it actually going to be a continuation of strength in the markets, while actually there's going to be a shakeout of weaker companies and elsewhere, as we've been seeing in regional banks? But at the same time, we've got Bitcoin potentially forming the head and shoulders. Let's see what happens there, and the inverted head and shoulders in play on the ETH weekly time frame. I don't know why number 2 says beef head and shoulders unlikely. Let's see. Let's not rule it out. So that's a summary just for this week. I know it's been a little bit slow to get this one out, but I'll be making sure I can get this next one out even quicker. Thanks for everybody's time. I look forward to touching base soon. Peace.